The 50-year mortgage, what is it? How much money could it save you? And will it make housing more affordable? My name is John D, and I'm a realtor in Fort Wayne, Indiana. And on this channel, I talk about relocating to Fort Wayne, things to do in and around the city, and of course, real estate, how to sell your home for more money, and how to purchase a home and all the steps involved. So if you don't want to miss any videos pertaining to these, definitely hit the like and subscribe button. Are 50-year mortgages actually available? Not according to the Dodd-Frank Act that was put into place in 2008, making mortgages only be able to go up to a length of 30 years. So if we wanted to approve that, legislation and Congress would have to approve this. So it'll be a little while before anything like this could take place. Now let's look at some actual numbers. Let's look side by side at the 30-year mortgage and the 50-year mortgage. How much money will this save you monthly, and what will go towards your interest? If you look at the 30-year mortgage, currently with the interest rates being what they are, you would be paying about $1,826 a month, and there would be no savings, obviously. For the 50-year mortgage, you'd be saving about $200 a month. Your monthly payment would be $1,614 a month. So about a $200 a month savings. Now let's look at principal and interest. With a 30-year mortgage, here's the payment that goes towards your interest. Out of that $1,800 every month that you're paying, you have $1,531 going towards your interest alone. That's the amount of money that you have to pay in order to purchase your loan. Now the principal is the actual amount that you owe on the loan. The payment towards that would be $295. With the 50-year mortgage, you would have the same amount going towards your interest, $1,531, and the principal would only be receiving $83. So the reality is, with the 50-year mortgage, it will take you 72% longer than a 30-year mortgage to pay off your principal. Now, how does all of this affect you? When you go to sell your home, the average homeowner usually owns their home between 2 and 7 years. When you go to sell, you don't want to be what they say, upside down in your loan. You don't want to owe more on your home than what it's worth. Well, you're making those interest payments, and that gives you less headway in paying down the actual amount that you owe. It takes longer to pay that down. There are always fees associated with selling your home, so this is something to take into account. When you're getting ready to sell your home, you want to make sure that you have a profit so that you could put a down payment on your next place that you are living in. A really good thing to know, if you're already a homeowner and you purchased a home in around the 2023 timeframe when the interest rates were up higher, you could currently refinance and you don't have to lose out on that equity. You don't have to have another 30-year mortgage. You could do a 10-year mortgage, a 5-year mortgage, a 23-year mortgage, whatever works best for you, and you can refinance right now. Now, if you have questions about who to contact in regards to that, comment below or text me. I would love to put you in touch with a lender who is amazing at getting you a great deal and helping you get the most equity out of your home. If you have questions about what the real estate market is doing currently in Indiana, text me as well, and I would love to answer your questions.